afternoon. My name is Al Pickett. I'm the author of the Blackprint, the new rules for winning finance, freedom, and flexibility, where I teach people how to profit consistently from the financial markets using technical analysis and specifically just focusing on the methodology. So the tools and the rules, the psychology necessary to do this on a professional level, and risk management. So how much should you be risking per opportunity, etc., and how to grow an account, how to grow an account and not blow an account. And what I want to do is just, excuse me, what I want to do is just shoot a video about moving averages. There's a lot of information out there, just seeing a lot in the on social media regarding the markets, more recently Snapchat, etc., and just wanted to put something out there to give people a little bit of information so that they could use some objective information to make decisions on what they're going to do with their money. So with that being said, I want to shoot a video on moving averages. It is one of the most powerful things that wealth managers use to determine whether a market, a financial instrument, whether it's a stock, a currency, commodity, or interest rate, whether that's in an uptrend or a downtrend. So the first thing that you need to know, is that moving averages, essentially they draw a line through data points to smoothen out that data. And ultimately what you get is a line. That line could be going straight up, that line could be going straight down, that line could be going horizontal. At any rate, it just smoothens out the data so that you can see exactly what's happening from an objective standpoint. It also helps determine trend direction when it comes to financial instruments. So is something trending down or is it trending up? And with that information, when something is trending up, it has the probability to continue trending up. And when something is trending down, it has the probability to continue trending down. And with moving averages, you have a higher probability of putting yourself on the right side of the market. They are used by top wealth managers. And there are all kinds of different moving averages, which I'll explain next. But the concept of the moving average is used by top wealth managers to manage their clients' money and be on the right side of the market. They can be used to enter and exit different financial instruments. And when I say financial instruments, I mean stocks, commodities, currencies, you name it. And just an example would when the price of something crosses a specific moving average, that could be used as an entry point, and then when it goes the other direction, it could be used as an exit point. But we'll dive deeper into that next. I'm going to keep the video really short and informational as well, so it won't be a very long video. So what does that look like? Right now, what we're looking at is we're looking at currencies. I'm on the currency chart. This is a euro, US dollar. So this is just basically this is the euro. And this is a daily chart. So, this is essentially all of February, all of January, all of December, all of November, all of October. And you can see this data. These are called candlesticks for you all that don't know. But candlesticks is essentially what its price. It's what the price is doing. That white and that green, that's what the price is doing. And this line you see is a moving average that's smoothing out what you see. So all of this information here is smoothing out that data to give you a visual representation of what the market is actually doing. So that's what a moving average is. This moving average is used by a lot of the big players. This is a 13 moving average, and all of that is, so you see there it says moving average 13. What that is just the last 13 data points is where it's drawing it. So these last 13 candles is where it's getting this line from. These last 13 data points, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So, and it's drawing a line through that data. So that is what a moving average is. And you can clearly see from the data, it's in a downtrend. So one could reasonably assert that the probability that the euro continues to fall is higher than it actually going up. So that is what a moving average does. And now what I'm going to do is go over to Facebook and show you This is a moving average here, right? This green line is a moving average and is the 200-day moving average, simple moving average. There are two types of moving averages. One is the simple moving average, and the other is called an exponential. The difference between the two is the simple takes, that 200, this 200 takes the last 200 data points and draws a line through that. If I were doing an exponential, it would use just this more recent data. It'd still be over 200 points, but the more recent data would be heavily weighted. So it's taking the last 200 points and drawing a line through that data, and you can see that's how we know when a stock or currency or whatnot is in an uptrend, because here's the line that says it is. All of this going up and down, up and down, and up and down. Well, there's the line that says it's in an uptrend. And so people who have been buying and buying, it just they've just been in an uptrend and it's just been going up. Here's a point where it looked like, oh, it may be turning around, but then it closed back up again, up above where we're talking about entries. At some point, I'll go more in depth in that in other videos, but it just kept going up after that. So that's what moving averages are. So I'm going to go back on this screen here so that you can get another peek at this. Moving averages, they draw a line through data points to smoothen out the data. They help determine trend direction. They're definitely used by top wealth managers, and they can be used to enter and exit financial instruments. So I hope that's helpful to a lot of people. If it is, drop a comment. Let me know what you think, and I'd love to hear from you if you have any questions and or interested in coaching. All right, thanks.